Paul David once said that if you want to win in the financial markets, or specifically in forex trading, place your order where you were supposed to place your stop loss. That's it. And shout out to you, Mr. Paul David. And it's working. It's working. Not 100%, but 80%. It's working because the banks knows where your order is, and they are more likely to take your money from triggering your stop losses. Wow. If you haven't subscribed to this video, please subscribe, like the button, comment anything that you want to comment, and I will make sure that I attend to those comments. Let's dive into the chart. What do you see about the USDT as well as Nasdaq? Today, Sunday, and I'm free, so why not analyzing? So let's take an analysis on the USDT and the Nasdaq. So let's quickly start with Nasdaq. Okay, now on Nasdaq, I'm on weekly time frame. As you can see over here, and let me just go to the daily time frame. So first and foremost, we're gonna have to understand that what is the overall market? What is the overall market? The overall market, it's a buy. Okay, why am I saying that? I'm so sorry about the noise. They're just renovating on the other side. What tells me is that the market was below this line, the trend line, in a daily time frame, and then it rejected. Let me say it braved, okay, broken this, and then turns out that it was a fake breakout, and then it turned back again, only to do what? Only to respect the trend line. So here's the trend line over here, and then the market respected the trend line, but not to respect the support line. So now, do you see that the market is more likely, let me say the Nasdaq, specifically Nasdaq as well as the USDT, they are more likely to respect the rejections, okay, not breakouts. If you are a breakout trader in Nasdaq, I'm not sure you can do it, but then yeah, if it's working out for you, that's depend on your strategy and your trading plan. Okay, so once again, let's dive in. So when I dive in, I see that the market still going up, but then where am I going to execute? Here is a psychological level. It's a level where the market is more likely to reverse. That's called a psychological level. So a psychological level is where the market is more likely to reverse, either with a buy or either with a sell. Okay, now if now you can even see that, let's dive into 4-hour time frame. 4-hour time frame now tells us that the market's still going up, but we're gonna have to wait to respect the rejection. Okay, so there are so many rejections. Now let's start with inserting a line over here. A line. Don't perfect the line, okay? The market is always choppy. And then let's change the color to color yellow so that you may not be confused, Now this is how it looks like. Okay, so after that, now we can just insert another line, and you see that the market is still going up. Okay, but then the question is, where is the reversal point? The question is, where is the reversal point? Because most of the time we're more likely to trade the reversal point. Okay, on Nasdaq, if you're trading breakout is not for me. Okay, let me just publicize it in that way. It's not for me, breakout, but I can tell that if you're trading the reversals, come on, man, you will win a lot. You will win a lot. Okay, so now there we go. So now let's take out the possibilities. Possibility number one, the market can break, okay, and then can come back again as a retest, okay, and then impulsive move. Okay, so why am I saying that? Is because impulsive move, it supports a daily time frame. It supports a daily time frame. Look at this. Okay, look at this. Now, if you go to a 4-hour time frame, once again, this psychological support zone is also telling us that the market still is going to reject. There is a possibility that it can reject the support. This is where now we're going to buy. This is where now we're going to buy. Okay, why are we going to buy? Because there is a rejection over here, plus there is a psychological level, a dominant one, the one that you can even see it. Done. Okay, and then if you want to break down even more further, you can just go to your 1-hour time frame for the execution, just to confirm. Okay, just to confirm. And then here we go. Now the market is still within a specific range, and if you bought in over here, it's a lot of money. And then because the market now has performed something called impulsive move, and then came back again to support what? To support the small psychological level. So this small psychological level was respected, and then the market went up again. And so there is a possibility, once again, the market could come into this psychological level, okay, and go back again to this double top, okay. So you can capitalize a lot of money doing that. Okay, you can. And when you go to this 2-hour time frame, 2-hour time frame already tells us that the market is still reacting in the very same way as 1 hour. So the 4-hour time frame, the market still tells us that we are about to sell, but not for a long period of time. When the market is in the psychological level, the question is, what are the confirmations way before you can execute? Okay, what are the confirmations way before you can execute? Because if ever the market comes into your favor, or in that predominant psychological level, you can't just quickly jump into buying, okay, or take any signal. There are certain confirmations that you need to take. The first one is to check whether the buyers are entering the market. How do you do that? You wait once until the price reaches the psychological level. Okay, number one. Number two, you wait at least after 2 to 3 candlesticks, or you wait for a fair value gap. Okay, I don't trade the SMC and ICT and all the stuff, but I can tell that if you are taking only one thing, which is called the fair value gap, out of it, and then put it on your analysis and wait for the engulfing candlestick, okay, after the rejection engulfing candlestick, then you insert what? A fair value gap, and you hit. So now let's go to the charts There we go. This it's a engulfing candlestick. Okay, this is why I supported the sell, but we're not selling, but you support it. When the market reaches over here, reaches in this point, okay, that point, even if you go, we can go to 4-hour time frame or even daily time frame. It's a psychological, it's a level that you can even see there. There's a possible rejections. Okay, so on this point, when the market or the price reaches over here, you go to a small time frame, which is what, 30 minutes time frame. Okay, on a 30 minutes time frame, already you need to comprehend that one, the price has to reject. Okay, secondly, you're gonna have to wait for at least 2 to 3 candlestick patterns. Okay, candlestick patterns. Number one, this rejection will support this rejection. Okay, because now we're still on a daily time frame. We are still on a daily time frame. No way. We're still on a daily time frame. But if ever the market will try to break, okay, to break over here, when it break, now it's destroying our plan. So when it's destroying our plan, now we change and we reanalyze again the possible move of a buy. Or if ever the market still wants to come in this green support line, now we're still going to anticipate the buy. Or if it's rejecting, now that simply means that the market is going to come to this level. To respect what? To respect this level. Okay? Simple as that. So on Nasdaq, you need to wait. You need to wait for Nasdaq. Nasdaq doesn't want you to hurry up because it's volatile. It's part of the CFDs, okay, an index. So you need to wait because you don't know what will happen. Don't just execute way before the 3 candlesticks after the reversal, or on a reversal point you still not executing. No, don't do that. And Nasdaq doesn't want people to execute more than 4 trades to 5 to 6 to 7. No, those people that are doing that, they're trading demo account. People that are real traders are executing at least maximum of 3 trades, at least maximum of 3 trades, so that they are easily manageable. And when I say manageable, they are easily to insert their stop loss as well as their take profit. So many trades, like 10 trades to 20 trades, there's no way. You rather increase a lot size on that specific maximum of 3 trades. That's it. So let's move on into the USDT. Without wasting time. Now the USDT. USDT. Okay. Okay. Let me just remove the chart. The drawings, I mean. All right. Now in the USDT, we are still on a daily time frame. So on a daily time frame, you can just go to weekly time frame. Weekly time frame still tells us that we are still in the trending market, which is a bullish trend. Okay, that's our confirmation number 1. Secondly, we jump on into the daily time frame. A daily time frame tells us that here is the first point, second point, third point, okay, inside like this. So now there is a possibility that the market could go back or reverse in this yellow trend line. Let me just make it green. Change the color to green. All right. And what is the psychological level? A psychological level, it is this level. This is the psychological level. Okay, and what you can do is you can just place your order over here, then you just take it more further, and your stop loss must be below this price, okay, must be below, okay, and you targeting higher, okay. Or if you don't want to risk in that way, you can just quickly go to a 4-hour time frame for more or further confirmations, okay. For further confirmations, okay, now the US30, it made a significant move. Jeez. Okay, so now this is a psychological level. Let me just put a line over there. This is a psychological level. This is where we expect or anticipate the market would reject. Okay, and here's the fair value gap. This is a fair value gap. Once again, there is a possibility that the market would reverse over on that psychological level. Let me just make it gray, right? Psychological level, and then if ever let me do this. Now, remember, starting from the trend line, it was the first point, right? The first point, and then the second point, and then we're anticipating a third point. Okay, and on that third point, that's where you're going to buy. And once again, for further confirmations, just like on the US30, like I have explained, you just need to go to 30 minutes time frame. Okay, in the 30 minutes time frame, you can just put just a small line. Okay, just a small line on 30 minutes time frame, and on that note, after the market try to break out, retest, then impulsive move. Okay, if ever the market doesn't react in this way, stay out of the market. So you wait for the confirmations. Go to daily time frame so that it may be more clearer. So this is how it looks like. This is how we're anticipating it. Okay, so let me do this. Yes, this is how we're anticipating. Let me just quickly go to a 4-hour time frame, and this is how it should be. This is how it should be. If the market doesn't react in this way, and then maybe or perhaps will break this trend line, support trend line, and then after it, it will be a retest, break and retest, then go down. Okay, because there is a possibility. Okay, and the other one is that there is a possibility for the market to reject over here in the psychological level, because it will respect the previous rejection. Okay, like that, simple as that. Okay, so now in the forex market, you need to apply the way you see things. Simple. You need to apply the very same the way you see things. Don't trade what you want. Trade what the market gives you and try to maximize the profits. I love the USDT. I love Nasdaq. And to incorporate your charts or your profits, you have to love it. Way before anything else, you need to love it. You need to love what you're doing. You need to love the pair so that it can, even if it tries to disappoint you sometimes, but still you love it. And the time you are in love with it, with the specific pair, that's where the benefits will try to come like this, because the losses maybe will be 20% and the wins will be 80%, which is a very beautiful ratio, a very, very beautiful ratio. Okay, now if you haven't subscribed, please subscribe to the button, hit the notification bell, and comment below to anything that you want to comment. You can just comment. Nonetheless, thank you very much. I will see you in the next video.